Welcome to Momentum Monday. Today is December 6th, 2020.
Ivan, take a bow, Ivan. I'm getting, people call me all the time. They go, Ivan. I love Ivan. I love Ivan. He's got a new list. He's kicking ass. Thank you. Ivan. So tell me, man, let's walk through some processes here, because you have the ability to, as I've always said, to go long to short, but also in this bull market, you've kind of figured out how to ride some momentum in new, unique ways. So tell me about some of the recent winners in SPACs and what you're seeing.
All right, let me share my screen real quick. By the way, our internet connection seems to be a little bit slow, but hopefully it works out.
I can hear you.
So before we go to SPACs, let me just mention real quick that the indices continue to make new all-time highs, all of them. The Nasdaq 100, the S&P, the Russell 2000. And the interesting thing is that the Nasdaq 100 keeps making new highs, while the top mega cap stocks haven't done anything for the past few months.
We talked about that. It's nice to see that the FANGs are and they're not, people said that the markets would get imploded if the 5 leading stocks fell apart, and now we're seeing the opposite. And actually, they're holding on. Money's just not coming out at all. People are just pouring more money into more, I guess, aggressive. I call it the unbundling, right? It's this Robin Hood unbundling. They're saying, "Fuck the S&P. Give me some alpha."
Yeah, I mean, basically that's one way to look at it. That people are looking for more risk, as we see that anything else has been going up. If you look at the best performing stocks for the past 3 months, it's all the economy stocks. I mean, GE is among the best performing stocks on the S&P 500 for the past 3 months.
Oh, my goodness, yeah.
That should tell you a lot. And then we have, industrial metal stocks like Freeport, like very interesting names, very diverse.
Yeah.
So I guess that's good. And,
yeah, I've only owned Boeing and SPG, and even Boeing's had a hell of a run.
Yes, I mean, definitely that the vaccine news has changed the way the market is discounting the future. So we're seeing all those stocks, industries that were hit the hardest earlier in the year are now outperforming.
Yeah.
While software is not doing that bad either, it's just building new bases. In the past month, definitely we're seeing some hints of frothiness in Mania. A couple weeks ago, we saw a lot of the electric vehicle stocks double and triple in 1 or 2 weeks. So definitely some elements of we're reliving what we did in the late 90s with the internet stocks. This time we're reliving it with electric vehicle stocks and SPACs and anything clean tech.
And I said this a couple months ago on my blog, but the way to look at SPACs, and now you didn't see it that way. I mean, not that you didn't see it that way, you just didn't fully comprehend it. But one of the best venture capitalists I know, who I was chatting with, didn't come on. He doesn't do promotion, but Mickey at Ribbit Capital was saying the SPAC revolution wasn't. He had raised a 600 million SPAC about 2-3 months ago, before it was super hip, and said the SPACs is no different than the WWW boom. People that are capable of raising capital and people that have vision will do so, and there'll be bad ones, just like www.whatever, eToys, and there'll be great ones. And I think, we're at this phase where it's just the financiers and the people with vision have realized that for decades now, we've taken stocks off the market, just like we've had more companies started than ever, but less stocks trading publicly. So all the gains were in the private hands, okay? And so the hard part will be figuring out when this gets too frothy, which is what we're talking about today a little bit. But really, we're at the beginning phases of this unbundling. Like everybody was crowded into the S&P 500, and it may have culminated with actually Tesla getting just recently added to the S&P 500, which is the S&P 500 does a good job of adding the biggest companies, right? But underneath this Tesla revolution will be thousands of companies that fit under this umbrella that Tesla's increased the market share. And so you're seeing that play out in electric vehicles, and it'll rotate into all these new SPAC ideas that you have started to discover.
Yeah, I agree. I think we're still early innings, and there's no tell when this thing is going to end. We might see thousands of those SPACs. It seems like some people figure out how to game the systems instead of going to the usual IPO process. SPAC is a much easier way, without doing too much due diligence, to get a private company public and get a higher.
If you got a ticker and it's listed and you can get it trading on Robinhood, that's the game, right? And I'm not saying it's a bad game or a good game. That is the game. If you look at weed stocks, they were the last huge industry that came on before Robinhood, right? You had Canada, everything was going public in Canada. Yeah. And so they had to go public with, limited banking underneath it and not good distribution. Plus it wasn't the best companies. So what happened with weed is all the good American weed companies are not penny stocks, but are pink sheet stocks. So they're not available to everybody, and Robinhood does not carry pink sheet stocks, right? The first weed pink sheet idea that became a listed security was this one that I've been talking about for a few weeks, MSOS, which uses a creative way to buy American multi-state operators. And I talked about this when I was in the low 20s because Todd Harrison was coming back on my podcast. So you can see when there's a will, there's a way. When there's not enough supply for the demand, you can see what's happening with MSOS. This is the easiest way for Americans that want to own U.S. weed, even though it's not perfect. It's the easiest way for people that want to own American weed multi-state operators to do this without buying the stocks themselves. And if we flash back to GBTC, which was the easiest way in 2017 for people to buy Bitcoin, we'll see what happened there. What did it go from 1 to 30?
Yeah, almost 40. Yeah.
And that was just off. So you can see what can happen. This is what I'm trying to help people understand. It's like, especially the people who are short. I'm not saying you should get long, but for the people that think this is a bubble, fasten your seatbelts because you haven't seen anything yet. We haven't had anything like this since 1999. The difference is here that the amount of supply is not near enough yet. What we know will happen, Ivan, and what you know, is that the supply will eventually dwarf the demand. And it always happens at the wrong time. Predicting that is the hard part. What I think people need to do in following you with swing trading is understand that the money's keep your money moving. Right now, the electric vehicles are correcting a little bit, and other SPACs, the hot money is moving around. So tell me what you're seeing.
Yeah, definitely quite a few new SPACs starting to move. 3D printing used to be big in 2013, 2014. Now it's coming back to fashion.
This is Chamath's SPAC that it just piped, and Desktop Metals, no revenue, totally uninteresting to me. But
I'm just quoting it as a trend.
No, you're trading them. So this is another one?
About electric vehicles. There are other SPACs that are just, coming back, and I see, what was the name of that woman that runs the ARC, Katie something. I see that she also has a separate ETF for 3D printing, and she owns quite a few of them. So to me, that's interesting. That's something that was hot 7-8 years ago. Now it's getting hot again.
Well, it's hot for different reasons now. It's hot because of global warming, and you can print all this stuff, and it's much more easier to.
It's the same thesis as 7-8 years ago, but it can work for a double or a triple. Even without any change in fundamentals. And sometimes we know that changes in price can lead to change in fundamentals. That's how reflexivity works. But another big trend right now is autonomous driving, and we see quite a few of those leader stocks that produce the chips that help cars to see. Basically, they're also getting super popular. A few of them,
How did this come on your radar, Ivan? Because you bought this at 10.
I bought it very early, when it started to break out. Well,
but how did it show up? What's the scan?
SPACs, and I would just start with a small position, just a few thousand shares just to keep it on my radar. And then once they start moving, technically, then I add to the position. So I just own a little bit of quite a few of them just to keep an eye on them. That okay. I think they have the potential to do well. And some of them don't move for for a very long time. I mean, for example, let's see, there's another one, WPF. See, this one hasn't done much, and this one is supposed to merge with a private company called PaySafe. So it's online paying. They're also involved in esports, gambling. So I own a few shares of this just to keep it on my radar, and nothing has happened yet. Eventually it will, or maybe it won't. So you just search and see if there is a private business that it's currently hot or it has potential, then you own a little bit of it, and then once the technicals confirm it, you can add.
Yeah, one that I played around with because I'm an investor in Manscaped is OAC, which is in a merger with Hims, right? So this is a direct-to-consumer one, but it's just hasn't really done anything. But this week it started to perk up a little bit. But that's a DTC SPAC. Another one is FEAC, which some guys got me into, which is I'm farting around, and I've heard good or bad on this. They bought Skills, which is an online gaming platform, but you can see that like you, I'm not doing the work on these, which just kind of makes me feel a little bit guilty. It's just I know that you're just riding a wave that seems to work. And for those that are really doing the work, there's probably some incredible 10 baggers here. How do you decide to take some profits on that laser?
I mean, you just take partial profits on strength. Like you sell
10, completely, or are you out of it completely?
You sell 10-50% here, then another 10-50%, and when it triples in 2 weeks, and you expect it back to be the best case scenario for the next year, you just take all your profits and you run. So
you're not looking to find the next Facebook.
I'm not looking to find the next 10 bagger. I'm looking to find multiple, 50 to 100% short-term opportunities where I would just take my money and just rotate it into the next big thing. And at the end of the day, if you manage to compound, you'll be able to achieve better results than just sitting and waiting. Who knows?
And you don't think about the taxes. In a moment like this, you're not thinking about the taxes.
Taxes are taxes. I live in California, where we pay the highest taxes in the States. I'm fine with it. If I want to live here, I have to pay the taxes, so it's fine.
You actually have paid taxes, you think?
I pay a lot of taxes. You wouldn't believe.
Have rumors circulating on the internet.
They're wrong.
Okay, so now let's get back to the real world. Not that that's not the real world. That is the real world, of course, but it's something that you have to really use some money management and some discipline to trade in that part of the world. Back in the real world of companies with cash flow, what's going on? So here's FANG going sideways.
We're seeing stay-at-home orders all around. I mean, we just got the one for San Diego. I think the entire California is stay-at-home. We know
San Diego got stay-at-home?
Yeah.
Oh, no. So how long do you have to stay at home?
I mean, you can go out. I mean, that means the restaurants, you cannot dine out. You can only get takeout.
So all my favorite restaurants that pivoted and have outside dining now have to close as well?
As far as I understand it, yes. For the next 3 weeks, which could be extended. I think that's for the entire California, from what I understand. And there are many other states and cities that they've done the same. And that's why it's interesting that we're hearing about those record online orders and how Amazon and FedEx and UPS have to hire, 500,000 additional people just to meet up the demand. And then you see a stock like Amazon is basically struggling. Hasn't done anything.
Because you have supply, right? You have Airbnb going this week.
Yeah.
You have DoorDash, which is a pure play on delivery, going public this week. So what's good for the goose may not be as good for the gander here, but all the attention is going to be on DoorDash, SPACs, Airbnb this week.
Yeah.
So the fact that Amazon holding is interesting. I think eventually money will rotate. If I look at Facebook, it's so universally hated. As the news broke, they bought a portfolio company of a customer, and if I were to speculate, because that's all I can do is speculate, their move into e-commerce could be fake. If you're if you're a conspiracy theorist and you think they're worried about how the government perceives them, but if you open up the Instagram app, as I've been saying, you can see this about shopping, and Facebook wants to be known for more than just advertising. And the data that they're going to get from shopping is phenomenal. Like I said, if I open up Instagram, I know I'm going to get good, maybe not good, but I'm going to get inundated with things that I'm interested in, clothing and shoes and athletic apparel and golf stuff. If I open up Twitter, I get promoted tweets that are just literally spam.
Yes.
Fascinating to me. If we pull up the stock of Twitter again, versus if we could compare it, it looks great considering we're in a bull market, but if you look at Snapchat or Pinterest, you can see that the difference, Snapchat's, now what valuation? Snapchat, which doesn't get any press, or Pinterest, which doesn't get any press, are valued way more than Twitter. So you can see that, Twitter has not figured out subscription, and they have not figured out e-commerce. I think if you look at Facebook, they realize that in order, and they're doing you can count on Facebook to figure out e-commerce and subscriptions. And that's what the acquisition of Customer, one of our portfolio companies, seems to indicate. And they've tried this before, right? And you can see with Facebook too, they're trying to get in the money business with Libra. So there's just so much stuff going on. It's fascinating. I think
solid acquisition. I'm super bullish on Facebook. I think they'll be the next $1 billion company.
Much as I hate the company, I have no say over who they're acquiring and not. We just happen to be in the right place, right time. But you can see that of all the FANG stocks, that Facebook and Google seem to be the strongest right now. Google also just extremely strong, and kind of lifting the FANGs right now, kind of carrying the torch. They've quietly just continued to execute. So they're getting a little bit of the attention. Elsewhere, you can see, I was going to say, like the gains, like the Snapchats, the Farfetches, the Etsy's, they're holding their gains. They're just digesting massive gains. They're not giving back gains, and they're basing and moving higher. So I just don't see how you fight this trend, but this won't last. That's kind of the phase that I'm in. It's like I'm expecting to get smacked in the forehead. I'm trying to contain my enthusiasm and not get people too excited about stocks. But it's hard not to be excited about stocks.
Well,
and if you think about macroeconomics, you're just going to get you're going to let your brain get in the way of making money right here.
Look at the US dollar, which continues to
work in favor of what the international stocks, huh? Oh my goodness.
We haven't really done that much. As you can see, the dollar is in an incredible downtrend. We just multi-year lows here. Yeah. And at the same time, interest rates are starting to kind of perk up, which is kind of the market discounting potential normalization. Hopefully we'll see that sooner with the vaccine, but it might take
Well, it's also why you're seeing like Wells Fargo and the banks start to bottom.
Absolutely.
A slight increase, this gentle increase in rates is good. Look at Wells Fargo. I mean, it's a perennial loser in the stock.
All the banks, yes. Here the regional banks.
Yeah. Again, I won't touch them. I mean, I'm going to play where the asset inflation really is. There's too much leverage in the banks, but they will work when there's this much leverage. And if rates start rising for 6 months to a year, especially gently, you know, there'll be worse places to be than banks. I mean, they've gotten a little bit lucky here with what's going on. So it's really hard to not be involved here. You're just pretty long, I imagine.
Well, I continue to trade. There's still so many good looking ideas. I'm just try to be prudent and take a partial profits on strength, because you never know when the move is going to end. So that's what I do. I know that I'm going to miss. I'm not going to take advantage of the entire move, but it's my style, just taking partial profits. So I have something to show at the end, you know, when that move ends.
Yeah, good work. Congrats on a couple of those winners. Amazing.
It's nothing special. It's a bull market, so.
No, I know, but you still gotta be in the game, and that's what you've been doing. All right, everybody, have a great week. Ivan, did I miss anything, or we're good?
I think that's all. See you next week.
All right, see you, everybody.
All right, bye.